Hello everyone, this is Arnaud Delapierre. Today, I am delighted to welcome you to a presentation focused on general finance. This discipline may seem a bit intimidating at first, but no worries, we will go step by step. The idea is to make all this accessible without daunting jargon or unreachable concepts. You will see, with some guidelines and basic rules, you can acquire solid methods to better manage your money. Ready to start the adventure? Stay with me and think about subscribing and liking the video. General finance covers all topics related to money management. Whether it's on a personal level or in a more professional perspective. It includes how we plan our budget, how we organize our investments, and even how we anticipate risks. By better understanding the mechanisms of credit, savings, and markets, we gain confidence to make informed decisions. The idea is to learn how to grow these resources thoughtfully without chasing after hypothetical lucky breaks. The ultimate goal is to become and feel more comfortable in one's choices and financial outlook. Finance rests on two major pillars. On one hand, the management of what we already own, and on the other hand, the strategy to grow our assets over time. If we don't know where our money goes, we often make poor choices. And if we don't set concrete goals, we risk stagnating even while earning a good living. To start, it is recommended to keep a precise budget where every income and expense is noted. It is the compass that guides decisions and adjusts priorities. Allow me now to briefly talk to you about a tool that I truly appreciate. The Notrade app, available for free on iOS and Android. It offers powerful trading signals for those who want to approach the markets with, I would say, an extra aid. Here, what interests us is not necessarily the trading part, even though it exists, is that you have a section where you can place all your assets. So everything you have in financial assets, you can position them in this application, which allows you to see a bit more clearly. For example, if you have stock somewhere, if you have liquidity, if you have, a bit of crypto, you have it spread around, you don't know where it is, well, you will be able to concentrate all that. Let's now talk about the difference between short-term vision and the longer-term one. When we approach finance, we sometimes tend to focus only. I want to talk about what is happening right now. However, to build a solid structure, it is important to think about future projects. This includes, for example, buying real estate, preparing for retirement, or anticipating significant expenses. Distribute one's capital between an immediate reserve fund and longer-term investments allows both to handle unexpected events and aim for more ambitious goals. Finance always involves a certain amount of risk. Nobody likes to lose their savings, so it's better to proceed with caution. To assess this aspect, we look at volatility, which means the extent of price fluctuations. The more an asset fluctuates, the more pronounced its potential for gain or loss is. That does not mean that one should not take risks, but rather that one should determine an acceptable level of risk. This approach often involves diversification. It is like not putting all your eggs in one basket to limit the impact of a potential setback. Mastering a few basic concepts provides a certain autonomy during negotiations with a bank or a broker. When you know, for example, how interest is calculated or why certain investments have a higher return than others, you have more leverage to discuss and compare offers. One better understands what one signs and can adapt one's choices to one's personal situation. It also helps to avoid pitfalls related to hidden fees or overly enticing promises. Having even a basic foundation of financial knowledge contributes to taking control of one's economic destiny in the long term. To deepen your skills, you can turn to specialized books, online courses, or even regularly follow finance-focused programs. Here is what we offer, but we're not the only ones. There are other very interesting channels. The important thing is to understand that learning happens gradually. You don't become an expert overnight, but each piece of information broadens our range of options. Keep an open mind and ask questions whenever you stumble on a concept. Forums and
groups are also
excellent places to exchange with other enthusiasts. Our help has a chat, notably, that allows this. The more we share our questions, the more we clarify our ideas and progress. Psychology plays an important role in how we manage our money. Sometimes the fear of losing paralyzes us and makes us miss opportunities. Other times, excessive confidence leads us to bet big. Yet, when we have evaluated all the consequences, knowing your emotional limits and adopting a thoughtful approach gives a better chance of success. When setting goals, one must also consider their risk, tolerance, and patience. An investment that seems less profitable at first glance can be advantageous in the long run if one is ready to hold on. When interested in stocks, some data can help gauge a company's solidity. One can, for example, examine its revenues, profits, and level of debt. Looking at the dividend history and the market share it occupies also provides indications of financial health. Without becoming a professional analyst, one can already sort between promising companies and those that seem less stable. The idea is to avoid investing haphazardly, notably by relying on verifiable information. With a bit of method, one can form a more precise vision and limit unpleasant surprises. At the same time, one must not forget bonds, which represent a form of loan given to a state or a company. The yield there is often lower than on stocks, but the level of risk can be much more limited. It is therefore an interesting tool to diversify a portfolio. We could also mention cryptocurrencies, which have gained popularity in recent years. However, be careful, they are subject to very pronounced volatility. Every investment must be carefully considered, taking into account one's personal situation or one's personal goals. No one holds the absolute truth in this field. Besides, for investment products, there are also macroeconomic concepts to know, such as interest rates and inflation. Central banks regularly adjust these rates to influence the economy. An increase in rates can affect mortgages and encourage saving more money. Inflation, on the other hand, erodes purchasing power and can reduce the real value of savings. This highlights the importance of investing money in assets that can better withstand monetary erosion. By understanding these mechanisms, we protect ourselves against certain sudden movements and remain calmer even when the situation becomes unsettled. Real estate management remains a cornerstone for many investors.
It's there.
A rental purchase can generate regular income while allowing you to build an estate. That said, you must consider the taxes, the maintenance of the property, and, I would say, the risk of rental vacancies. The important thing is to have an overall view and compare the different possible routes. Others prefer to focus on dividend stocks, offering a regular income that can supplement a salary. The chosen option depends on the situation and, once again, on each person's preferences. The diversity of financial approaches provides the opportunity to find a personalized balance. To stay updated, follow economic news and market trends. Information spreads quickly, and a regulatory change can sometimes disrupt certain strategies overnight. Get into the habit of staying informed with several reliable sources to avoid biases in particular. This also applies to expert advice. It is always better to analyze yourself rather than blindly relying on a single opinion. And if you like this kind of content, consider subscribing and liking the video. It encourages me and ensures you don't miss future uploads. In conclusion,
To conclude. Let's conclude.
here That wraps up our topic of the day on general finance. I hope this approach has given you some guidance to move forward with more confidence in your projects. Remember that patience and curiosity often make the difference. Finance is not reserved for an elite. Everyone can take an interest in it and succeed in finding solutions suited to their situation. Keep learning, trying new ideas, and staying clear-headed when faced with promises too good to be. Thank you for listening up to this point. We'll meet again very soon to delve into other aspects of finance.